And just to introduce myself, okay, I'm going to now hit the scary button, which is called share. We're going to hopefully see how that works. All right, here we go. And right. Uh, Okay, I'm going to ask, is that okay for everyone? Can everyone see the full screen? No problem. Lovely. So, just to introduce myself, I'm James Chaplin. I'm the founder, I'm the CEO of Vacancysoft. We've been going for, I don't know, God, nearly 20 years. But anyway, last week, as mentioned, we effectively presented our findings on what we have seen been happening in the UK labour market over the last 12 months, and also gave some forecasts in terms of where we think the labour market's going. We ran an event. It was very well attended. But before we go into that, just very quickly more about us. As I said, we've been going for nearly 20 years. We've got lots of lovely clients. Thank you, clients, lots of them. But we're always happy to have more if you'd want to talk to us. And in terms of the data, let's talk through what we actually do. What's our USP, if you like? We start by the data we source is not from job boards, it's not from LinkedIn, it's purely from company websites. So what that means is we're monitoring individuals, companies, websites for change. We're identifying the new jobs they're publishing. We're algorithmically converting raw URLs into structured data. We're then supplying that data to end users. So consultants, for example, get lead gen emails, notifications on what jobs are happening where. It then powers our analytics reporting environment, which then means that for people involved in business management and strategy, you can then pull out reporting to identify which market points in the market are changing and which are growing. Yes. Anyway, that's what we do. And along with that, we produce lots of insight, lots of reports. As touched on earlier, we do produce a co-series with APSCo. That's a monthly set of reports where every single month we look at different regional hubs, what's happening, whether it's in London, North, Midlands, South. I think on the APSCo materials, you can pull up any of the regional reports we've done with them. But we also produce reports with other partners, life sciences we do with CPL. We do with EJ Legal, a law report series. We do a finance one with Morgan McKinley, property, insurance, and we also do a global series, which we do with Robert Walters. So now what's happened with this magazine is what we did is we pulled together all of our annual reviews by segment, and then we created a magazine with the findings, and that's what we released last week. And that's what we showcasing today. I'm sorry I'm sniffling a bit. I've got a little bit of a cold. It must be the change in weather, so bear with me. I'll go as fast as I can. But anyway, so we get featured in lots of media. Lovely. Thank you, journalists. So we had Bloomberg at our event last week. We had FT at event last week. We get a lot of coverage. So if you look us up, you'll see it there. So that's nice too. And really, in terms of today, let's run through the subject headings, what we're going to be covering. Just going to run through some of the key findings from the key chapters of the magazine. Later in the slide deck, there's going to be a QR code. You're going to have the ability to download the report directly. So we'll hold on that slide later. But just as I said, just from the top, we're going to start by looking at the UK is not an island, especially in this new world of geopolitical change. What happens externally impacts us. We've seen that. We're going to look at national trends. We're going to then look at some of the key industries, technology, obviously the major one, banking, finance as well in the UK is significant, insurance, law, real estate. We're just going to go through each one, and with each one, well, with most of them we've got partners, but if you see one which doesn't have a partner and you're interested in finding out more about partnering with us, then just do pop me a note. We can talk about it. Or even if you see a partner there and you'd like to know, it could be that there's an opening in the future there with us, so do get in touch. Anyway, so I'm going to move on. First slide. Right, international overview. So as I mentioned, this is a series we do with Robert Walters, and what we do with this one is we profile the largest 500 multinationals worldwide by market capitalization. And what we do is we look at all of their job postings worldwide across all functions, and just kind of understand what are the big fish doing. And it's this whole thing of, where the big whales go, everyone else follows. So we look to just create insight here. And I think what's quite interesting in terms of this, in terms of understanding what we're seeing happen, is that we're now in this era of, if I can say this, the Trump era. I mean, yeah. And that's really got some very, very big implications. We've already seen the opening salvos with the Trump tariffs, which are starting to hit. I think he's announced now that Canada and Mexico tariffs will go ahead. He's already put in place tariffs on China. We have seen the defense spending in Europe. Denmark have now increased their spend off the back of what's happened in the last few weeks. The UK has announced it will too. And we're seeing also the Stargate AI program, which has now been announced, which is going to be really quite interesting. And that's contextualized against DeepSeek. Energy is going to become a big point as well as the US pivots towards, the whole mantra of drill, baby, drill. That's going to start rising as well. So when we start looking at all of this, now, in terms of the index, it is heavily dominated by financial services and technology. But what we see is that in the tech industry globally has been picking up in the last year. And that a big part of that is to do with interest rates falling. As interest rates are falling, just quick macro point. Obviously, what that means is that the cost of just sitting on capital goes up. Because if you're just sitting on cash and the interest rates coming down, then you'd have less opportunities to just use money in debt capital markets. It becomes about so you look for ECM, equity capital markets. So you see funds actually push to get money out. The other thing that's quite interesting about what's happening in 2025, and this is just like a geek point, but obviously we all remember what 2020 was. That was the pandemic. But what also happened is that there were a lot of VC and PE funds which run in 5-year cycles. And they effectively had funds commence in 2020, where they'd fundraised for them in 2019, right? And now they're hitting their 5-year limits. And what that means is they're meant to be now dispersing back funds to shareholders. And so now what we are expecting to see as a result is a glut of small cap M&A. I'll touch more on this in the finance one when we go there. But what we're starting to see as a result is for FS picking up. We're starting to see tech media, tech firms, telcos pick up as well. And we're going to see the growth and emergence of defense, energy, AI. Those are going to be the three industries which will really start coming on the agenda on everything that you're reading in the newspapers. Those are going to be the big three to watch. Before I go really fast, right? So if people have questions, I don't mind if you interrupt me. Just ping a question to chat, or if you just want me to move forward, I'm just going to take a moment of silence here. Go, okay, 3, 2, 1. Okay, I'm going to the next one. Okay, this is the one we do with APSCo. So as mentioned before, this is a report series that we've been publishing with APSCo for over 10 years. Crazy. Time flies, yeah? And really what we're doing with this one, this is looking at all industries in the UK. It's looking at all what I'd call professional vacancies, white collar. This is not looking at part-time staff. This is not looking at blue collar staff. This is not looking at interim. So this is permanent jobs in white collar in the private sector. And so what we're analyzing straight away is we can start to see a couple of things. The first thing I'm going to say is, well, we all remember what happened after the budget and it got everybody in a tizzy. Yeah, now, a couple of things. Yes, we saw a downturn in job flow. Yes, it was quite sharp. But at the same time, can I say this? We get a downturn in job flow every year in October, November, December. Yeah, or November, December. And we all understand why, because the recruitment cycle is really simple. It's like towards the end of the year, internal talent teams are focusing on filling their fill ratios internally, getting people starting by January, and they're less worried about new jobs. So even if there was a slowdown in new vacancies in November, December, and even if it was in part linked to the budget, it was just as much about the tidal nature of recruitment. And that's why now everyone's feeling a little bit more positive, right? Because like, there's been an uptick in the market. But hey, what a surprise. Q1 is always the busiest quarter of the year as well. So what we need to do when we're looking at these things is, first of all, understand the tide. And, when we look and say, oh my God, we're at low tide, just don't think of it in terms of the seasonality of the year first, and then ask the question, and how does that then compare? I think that's and look less at the Q and Q and more on the year on year. I think that's the really important thing, which I would be taking away from that chart here. Looking at this one, the interest rates coming down has been helping the UK economy. That's clear. But I would say it's disproportionately been helping London. So what you've seen happen is you've seen more investment into the capital, whereas regionally it does seem to have been shrinking. Lots of factors here, but that would be my takeaway. There's been a pickup in London, a downturn regionally. London is remaining quite resilient, whereas the regions are struggling. Now, one more, I'm going to add an extra element onto this. And that's a lot, I think, to do with the budget. So we had a big back and forth in the event last week. We had a hospitality recruiter in the room, and Anne Swain was very nice to him. I'm not going to say too much about it. People who are there will know the exchange. But the short version is that if you're looking at these sectors which operate on low margins, like retail, like hospitality, like some of these other areas, well, they're the ones which are really, really hurting. Because suddenly their whole business models are coming under question, and you're getting businesses which have been profitable suddenly be loss making. And they've got to recalibrate very, very fast. So hence you got lots of letters going into government. They're going like, no, 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 you can't do this to us. It's crazy. So we are what we're seeing, therefore, is that where you look at London, where you have in terms of HQ offices, everything like that. I'm not saying you don't have retailers in London, but you don't have their HQs there really. They're in other places. Where what you're seeing is across the country where consumer goods and services businesses are spread, they're shrinking in terms of their functions. Hospitality the same, but it's not just about the down. There's also about the up. With a new government, there's a new strategy and there's a new direction. Now we can debate how effective their strategy is going to be, but only time will tell. But what is clear for me is that the sectors that are linked to the government growth agenda are going to surge. I mean, we've already seen the announcement around house building, right? And let's see if I can zoom in. There you go. Ooh, zoom. Big pickup in real estate construction. Technology picking up. Look, we've got the announcement from the government around AI. What does that mean? They're going to set up these clusters of hubs. They got the first cluster going live in the Midlands, and that one's actually going to be stationed, this new AI hub, right in the heart of where our energy industry is going to be, because they want to design a program for what's it called? What's it? With Rolls-Royce, which is all about the small nuclear power systems, nuclear power engine systems. So that's going to be going live too. And what we expect to see as a result is we expect that you actually will see 3 or 4 industries really start to pick up. The first is going to be real estate construction. The biggest constraint on that one is going to be personnel, workforce. Well, and that's why with this government, what's quite interesting is a lot of the constraints that the Conservative Party are putting in place around making it harder to get visas, everything else. The Labour Party are just loosening those to make it easier for companies to get those kinds of skilled people in place. You're going to see across with that engineering, tech, defense, energy. These are going to be the areas that grow. With energy specifically, the only question is the pivot from oil and gas to renewables, which might be a bit disruptive in the beginning. I'm going to touch more on that later when we get to the engineering aspect of this presentation. But looking at the top 10, before I move to the next slide, what for me is quite interesting about this is I go back a few years, and this table would have been, in the way that we're looking at the Global 500 with Robert Walters, it's dominated by tech and financial services. Go back a few years, and this table would have been the same, would have been dominated by tech and financial services. If you don't believe me, go to the APSCo Resources Hub and look up a report from 3 years ago. We'll see the table there for yourself. The pivot is clear. I mean, look, you still got JP Morgan there, you've still got some Lloyds there, Barclays, but it's like you can see the growth of real estate, construction, engineering companies coming to the fore. So, punchline, if you're a generalist recruiter and you do everything from accounting, finance, HR, marketing, these kind of disciplines, look for the sectors which are going to be backed by government growth. That's, I can think, the key takeaway. I'm going to move on. Up for a note. Okay, moving on. Technology. So this support series we do in partnership with Job Adder. If you guys don't know who they are, well, have a chat with them. They'll tell you who they are. And really, what we do in this one is we were looking at what we wanted to really look at is everyone's talking about AI, everyone's talking about data. How is that manifesting in the job data? What's actually happening? And what was quite interesting is that when we were looking at the overall in market in terms of everything that's going on, IT's actually flat. Yeah, it's flat overall. Actually, that's the harsh truth. But within it, there are areas which are losing and the areas that are gaining. So when we start to talk about areas that are losing, what we see is it's outside of the tech industry, outside of financial services, and especially regionally, that's where you're seeing the shrinkage. Where you see the pickup, we touched on London, we touched on AI, but also in fintech. I mean, fintech's about 44% up year on year. And specifically within that, AI data roles, I think, are up 72% year on year. So this is like a really, this area is expanding, but it's heavily linked into scale ups. So you look at the capital flows, and there's obviously a direct linkage between money being put into companies by third-party VC funds and PE firms, and companies going, "Oh, we got money, let's go hire people." And so on that point specifically, what we would say is it's worth understanding that last year, about 2/3 of all the VC and PE funds that came into tech companies and scale-ups came from international VC and PE firms, not from the UK and domestic ones. So when they put money in, typically they just put it into London-based firms. Well, if they don't put it into London, it's going to be very specialist subsets like biotech or something. So well, as a result, we're seeing London being the biggest beneficiary of this job growth within technology sector. So yeah, anyway, I'm gonna move on. Then we got a whole prep, by the way, with the technology, with the APSCo report, there's actually a full-length 1,200-word report. You can go, you can read, you can download, you can get that from their website. With the technology one, same applies. If you're interested, you can go to our website, you can read the full report, and it's got not just these two charts, it's actually got a lot of extra words with it, just talking about the stuff I'm talking about. So if you're interested, if you are a tech recruiter, you can go off to our website, you can read that one. I'm gonna go to the next slide. Finance, banking. Okay, for a long time, this has been the mainstay of the UK economy, but we have, obviously seen a little bit of a slump in the last few years. And so there's three different themes which we're going to talk about simultaneously now, because this is it's all intertwined. First of all, we can go back to the budget. What happened with the budget? Well, last year, I think, was a record year for tax recruitment. Tax recruitment went off the charts, right? Across all industries, suddenly companies going like, oh my God, all these changes are happening. We need to get more tax advisors in and that staffing level. So if you're a tax accountant last year, you had a really good year. Well done. Don't talk too loudly because other people in the room want to beat you up. That to one side. Other areas which are doing really well, we'll talk about pockets of growth. Fintech, we mentioned before. Fintech star performer, 44%. What's also really interesting is that when we look at fintech within the context of financial services, what we're starting to see is about I'm going to say this with an IT moment for a second. Within where IT roles now, looking at financial services across banking, insurance, and fintech, about 30% of IT roles are now within fintech as opposed to banking and insurance. If you go back 3 years, that was 15%. So we're really seeing this expansion and growth within fintech, and it is at the expense of the other sectors. So once again, if you are in banking, financial services, recruitment, I would almost be looking at it and saying like, how's our desk configuration set up? Do we have the right config at the moment between our banking teams and our fintech teams? I'm going to add in a couple of extra layers really quickly. Pisces. I don't know if anyone here has heard of Pisces. If you haven't, this was a government initiative, and the idea is to create an intermittent exchange for privately owned companies to allow them to sell equity in their businesses to third parties who are regulated and authorized by the government. So specifically, it's designed to be private equity firms, designed to be asset managers. It's not just any Joe Blow. And really, the point is that when you look at the nature of capital markets and financial services, what the UK has done really well is with EIS and with SEIS, is they've created a first phase, which is basically globally competitive. It means that if you're setting up and set a company and tech and you want to get investment in, the program there is really, really designed to attract investors. But then we've got the second problem, which is, all right, you're starting to be successful. You got some money, but your angel investor who's put some money in at the beginning, let's say they put in £200,000, they want to get out. But if they want to exit, then it's like any person that you want to exit to, will go through their own round of due diligence. I mean, it can take a year where the only thing the executives are doing for that year is running around trying to get their angels their investment. So it's hugely inefficient, hugely expensive. And as a result, for a lot of companies, this is a real friction point between the executives who run the business day to day and these minority shareholders who help in the first phase of growth. So the idea of Pisces is to fix that. And what would happen is that in the way, if you want to go on to London Stock Exchange, you have Nomad, which is a single point of due diligence where you go through and it's regulated by the Financial Conduct Authority in the London Stock Exchange. What you would have is a singular due diligence process. So a company go, right, well, we want to go and list on Pisces. We're only going to list on there for a week, yeah, as an example. And for that week, there's one due deal process. Now, instead of it costing God, I mean, a full London Stock Exchange listing costs £750,000, right? I mean, it's really expensive to get on there. So instead of it costing that kind of money, maybe it only costs £50,000 to list on Pisces, right? We go, okay, fine. We go and list on Pisces. Maybe we got a £10 million cap valuation, and suddenly we can then that guy who's got 5% of equity or 10% from when they got in, they can then get their money out, and we can consolidate all our minority shareholders into one. Similarly, if we got people who got sweat equity who had left the company, they can then exit through the same way. If you're interested in Pisces, look it up. It's on the government website. They break down how that's designed to work. And the reason I'm sharing it is this is meant to be going live this year, guys. This year, it's real. It's coming. It's interesting. It's something which we're going to be touching on our next event, our finance forum on March 11th. So if you're interested in financial services, this is something to be aware of. So do look out for it. All right. Once again, this report, Finance in partnership with Morgan McKinley. This is available on our website to read, the full version, 1,200 words. It will give you all this insight in detailed breakdown. But once again, and I think what I want to do is just, in terms of the pivot, if you just look through here, this table, and you look at, yes, you got all these big banks, but pretty much all of them, right, are down year on year in their activity. And that tells you everything you need to know when you think that fintech's up 44%. Right, I'm moving on to the next slide. Insurance. All right. Insurance for me is a really interesting sector to talk about. And the reason I want to say this is because normally what happens is that you have a direct correlation between profitability and reinvestment and expansion, which manifests as hiring. And the insurance sector had a record year last year. I mean, they had bumper profits, but job flow's down. And this at first is a bit strange. Why is job flow down when the sector is recording record profits? So, so you do a bit of further analysis and you go, that's really interesting. Now I understand. So what's happened is that AI is quite literally disrupting insurance as we speak. So how is it disrupting it? Well, let's start with a big chunk of what happens in the insurance sector is procedural roles. It's technical roles, which are to do with handling and managing claims. Now, the new AIs that are launching can handle more claims faster and more accurately, and this is proven. And suddenly, insurance companies are going, so we can handle more claims quicker and more accurately by just integrating these AI solutions. We don't need as many claims people. Yeah, I mean, really, it's a big drop. Now, underwriting has had a slight bounce back, but that's another area which has been impacted. And broking as well, and there's a big move towards automation of broking as well, is also being impacted. So what we're seeing is that the whole industry is going through a sea change, where the industry itself will be fine, but how many people it employs is up for debate. And fintech is now creating its own subset, insurtech, as a result, right? It's like the micro segmentation and the bubble of fintech companies specializing in this process specifically. So what I'd say is, if you are in the insurance industry and this is what you do, your pivot should be to tech roles within insurance, AI roles within insurance, tech companies targeting insurance firms. Understand that the one thing that you have, the most powerful thing you have ultimately is your relationships. Leverage your relationships with the people who make the decisions to make sure that you then can utilize your skill, which is the ability to put the right people in front of them. Okay, I'm going to move on. Once again, Once again, you can down this report from our website, 1,200 words long. It goes through all of this in detail if you're interested in learning more about the insurance sector. All right, I'm going to go to the next one. Law. Well, whatever happens, we'll always need lawyers, right? I mean, so new government comes in and, well, straight away, well, they've got big initiative on real estate construction. Ooh, lots of jobs in real estate construction just for the lawyers, right? Ah, okay. Other ones. Ooh, look at employment creeping up. Yes, we know what's happening there, don't we? There's some employment legislation which is creeping through the charts, which might actually get signed off, and everyone's kind of going, ooh, that's interesting. Lots of consultation, lots of ferocious lobbying going on, and who does the lobbying? It's the law firms. So what we can see is that actually up until sorry, that should say Q4 there. Up until Q4, the legal sector had been quite a good run, right? 6 quarters in a row, it was up. Also, the other point to make is that as interest rates came down and corporate finance came back, the corporate law firms as well started to pick up a bigger share of the work in London specifically. So you started to see that happen. Um, but nationally, and then LDR is also picking up. So these are the kinds of things in the legal. So legal sector is actually doing pretty well. I'm going to give a caveat here because what we just talked about how banking is almost post disruption. It's just now just getting hammered by fintech. Insurance is mid disruption. Law is next. That's my take. I'm not sure if it'll be this year, but the reason I say that is that the new technologies, the new generative AI solutions coming through. There was a study which was done by Linklaters, which people who don't know is one of the largest, most prestigious law firms. And what they did is they did an equivalent of like a high school exam on a series of different AI solutions to say, we're going to give you the workflow that we would expect to give somebody who's a 2-year qualified attorney, lawyer. And these guys are on salaries of 120, 150,000 pounds per person. And we're going to see how well they handle it. And the short version is the feedback is the AIs are getting pretty good. And whilst you'd still need a senior lawyer, a mid-level lawyer for 4 or 5 years to then sign anything off, there's going to start being a hollowing out of that 0 to 3 qualified lawyer range as AI solutions become better at doing that part. Not that far away. Linklater, there's a press release from Linklaters about it. Check it out. It's very, very interesting. So what you're seeing is you are seeing that's next. So look out for that one. And once again, if you are a legal recruiter and your bread and butter is 0 to 3 PQE legal roles, start pivoting to law tech. It's an obvious thing to do. Or start pivoting to other roles in the sector, like the marketing roles, HR roles. The law firms as well are pivoting to professionalizing how they operate with better business management professionals. That's doing very well too. But the point is that when the market changes, if we don't change with the market, you know, we can't expect to continue to do as we did. All right, moving on. Real estate. Well, we've been talking about real estate all the way through. Now, what's interesting is that commercial property really has been performing very, very well outside of London, and it's specifically the southeast and east of England. And that's quite interesting because there was a study which was done, which was talking all about the formation of new towns or expanding existing towns, and how do you get the maximum economic value out of the real estate and construction work that we want to do. And it really talked about how these are the hubs. Lots of hubs around between connecting Oxford and Cambridge down to Reading, this kind of line, which is where the maximum economic value would be. So the plans are really quite formidable, I would say. There's this little town, for example, which is on this train line, which the train line I think is like the fast train line which goes from London to Edinburgh. And this train line has a little tiny town of like 5,000 people. And this town is right in the middle of Oxford and Cambridge. And one of the things the government wants to do is take it up to like 50,000. I can't remember the full details, got it somewhere. But you're seeing this kind of under the Labour government, they really don't care about the NIMBY factor. None of these people vote for the Labour Party. So they're like, oh, you're not going to vote for us anyway. We don't care. Under the Conservatives, they would never be able to do that. They'd be like they'd lose all their voters. So what you're seeing, whether you like it or not, is that the southeast of England is about to be transformed by the Labour Party's policy plan on scaling up house building across and infrastructure across the southeast. It's real. It's coming. If you want to see what they're planning, go to their website. It's their policy announcements are clear. Bam, bam, bam. They're telling you exactly what they're going to do. And if you don't like it on a personal level, well, then start a campaign. Right, get your campaigning out. There are lots of people doing that already too. So anyway. Moving a bit more onto these slides, just taking it back to where we are. What we can see is, look, CBRE 68%. That was stood out to me. If I can say this, the reason why I wanted to pick out CBRE, because a big part of what CBRE do obviously is property management, and a big thing that we've been seeing. I know you in the recruitment industry are seeing this. We're seeing this. Is the push by corporations to get people working back from site again, right? So we've had this kind of work from home, we've had this remote working, we're having hybrid, everything else. And the truth is in the data, what we're seeing is that as more people are coming back to work from the office, well, the companies that manage the properties and the companies that have the property managers are increasing their hiring to meet that demand. And CBRE is as good a bellwether as any, 68% up. Okay, I'm going to move on. Okay, we'll continue. Life sciences. All right, so very, very quick paraphrase situation, life sciences. With life sciences, we had seen a severe depression, almost like a hangover, maybe is a better word, hangover in life sciences post-pandemic, because the surge in hiring that happened in order to enable us to develop the drugs that we needed to get through COVID, that combined with the UK leaving the EU meant that the UK could no longer see drug applications through the EMA, and it's going through MHRA. MHRA isn't necessarily meeting the brief in terms of what it needs to be doing, still with backlog. So interestingly, what you're seeing is, and just to explain that a bit more, if you want to see a surge in jobs in life sciences, well, there's two ways of doing it, but ultimately clinical trials is where it starts, because you've got to have trials done. The UK, because the NHS actually has a huge patient database, which is very, very valuable for drug companies. We're one of the only companies that organize our medical data like this, which gives us a real USP. But the problem we've got is that if drug approval is just taking so long, and we're running at twice the speed of, say, the twice as long as the EMA, then in practical terms, what happens is companies go, oh, well, we'll just do it in another country. We can do it in Poland. That's cheap. We can do it in Romania, wherever. And we'll do the drug application through the EMA in Amsterdam, and we're done. So the UK is losing out because of that. Where the UK is winning is in Canary Wharf, pivoting to biotech. And I don't know, for anyone who's been down to Canary Wharf recently, I went there for the first time actually a few weeks ago. I went to see an exhibition, but I was like, wow, okay, I hadn't been there for a while, like years, right? And I was like, wow, okay, you got this biotech hub, biotech village. You can see the vision, and it's working. It's scaling. It's manifesting. So what you're seeing with the biotechs is that the biotechs are actually creating this new ecosystem in Canary Wharf in London. The job flow is happening there, but in the other parts of the sector across big pharma and the clinical research organizations, it's in decline. Okay, moving on. Engineering, we touched on this earlier. Right, well, to talk about engineering properly, we've got to talk about the skills gap and the skills shortage. I mean, we talk about skills gaps and skills shortages in all markets, but engineering recruiters, they definitely have this the worst. The problems here are just really, really bad. And for example, let's just start with the fact I think it's something like 200,000 engineers are set to retire over the next few years, and there still isn't a plan to replace them. We're not actually seeing enough people taking engineering degrees to make up the shortfall. And on top of that, the government agenda, there's Atom Valley up in the north, which is all about creating a cluster for high-tech industry. You've got construction plans. You've got defense scaling up with the latest announcement, latest budget. You've got the plans for SMR technology with Rolls-Royce and the nuclear reactors, which is going live. All this stuff is like going on simultaneously. And the one thing we don't have is enough engineers to make it all work. So what do I think is going to happen here? Well, what I think is going to happen here is that the government is going to bite the bullet on whatever reform might say about it, and they're going to start aggressively fast tracking people with engineering expertise to get work visas for the UK in order to meet this demand. But that for me is just obvious is what's going to happen. Because you can talk in the long term about creating these skills partnerships with industry, which is what they're doing around internships, industry investment, etc., to get more people studying engineering. But look, you take a country like Germany, which has 17% of its university graduates and might come out with engineering. UK, it's 9%. In Japan, it's even higher than 17%, and so forth. So you've got a lot of these kind of issues, which I would say are emerging. Now, going to do a little plug here. This is one of the report series that we don't have an industry partner with. If you'd like, if you are an engineering recruiter and you'd like to do analysis around engineering markets with us, come talk to me. Okay, that was my plug. All right, moving on. Telecoms. Open RAN. It's quite interesting. So that the idea of Open RAN is, why create 3 or 4 different mobile masts between T-Mobile, Vodafone, etc., where you can actually create interlopability between different companies' infrastructure, which then means that individually their costs come down, and just importantly for end consumers, the product value goes up. So this is working, starting to work. It's interesting. But the sector does remain flat. You're seeing Vodafone EE looking at merging. But I think the area of growth here is in IT security. Want to talk a little bit more about this. For people who are less familiar with it, we're now going through a move to open banking. This is all really intertwined and entangled. But what is open banking? If you guys haven't done it already, it's when you basically pay by bank, right? So instead of going on your phone and getting out your credit card or debit card and putting in the numbers, you just have an option to pay by logging into your banking app and doing it already. That's open banking, right? The challenge with open banking is the security implications. The security implications are immense. And so all these organizations that want to actually improve their move to open banking are going to need to improve their security, where mobile devices are going to be the weak link. And the companies that specialize and are best placed to advise on IT security there are the telcos. Vodafone have their own consulting arm here, everything else. And then add to that DORA, and DORA is the new regulation coming out EU, which is all about security and the provisions associated, where even if you're a British company, if you want to sell into the continent, or even if you want to sell into a big European company that has operations in the UK, they're just going to ask, are you DORA compliant? So for IT security, I think that the IT security consulting arms of the telcos, I think, are going to do quite well over the next year or so, as both DORA becomes fully in effect and open banking scales up. With the rest of the industry, I think it's a little bit flat. That's my read. All right, moving on. Once again, we don't have a partner here. If you're a telco recruiter, you like to talk to us, you like to do content insights, get in touch. Finally, this is the last of the industries we're covering the presentation today, which is good because my throat's starting to hurt and I need to have a Strepsil in a minute. But, okay, blitzing through. What's really interesting for me about media is the way that MarTech is transforming the industry. We've been talking about already this with law, with insurance, with banking. Now, with media, let's break it up into 2 parts. Yeah, we're going to talk about the publishing element and we're going to talk about the agency element. Starting with the publishing element. Well, there's a big debate going on. There's a huge piece of legislation which is in debate where the government are planning on giving big AI companies the right to parse content from media companies indiscriminately without having to pay royalties. Ooh, interesting. Let's see how that goes. That's a big question. If that happens, that's going to be a big challenge for the media industry. But what they are doing as a result is they're putting everything behind paywalls. So you've seen The Guardian have now put everything firmly behind paywall. Reuters have put everything that's the first time, by the way, Reuters ever. They put everything behind paywall. I think they're linked. That's my personal opinion. They're just saying, right, well, you might be able to parse open source stuff, but we're putting everything behind paywall. And if you don't pay, you don't get, as a way of defending against it. I'm not saying I'm right. I'm a big believer in just join the dots. You see one thing, what's the causality? What's the relationship? Or what's the correlation? They've also got business models which are struggling anyway. So they're like, well, we'll kill 2 birds with 1 stone. We're going to make more money and we're going to lock out the AI agents and we're going to have our own proprietary ring garden of insight and content that we produce. Makes sense. And so So pretty much everyone now who's involved in that space, whether it's FT, whether it's Bloomberg, whether it's all of the above, they're all doing this. What does that mean? I think that, print will continue to struggle, but digital revenues will grow. There's an old maxim, which is print pays pounds and digital pays pennies. But, a lot of pennies make good pounds. And the advantage of digital is that you no longer are confined by your regional distribution. So, for example, for people who are old enough, you'd remember, like, if you had an FT subscription, right, and you're in continental Europe, you'd be struggling to get the morning's edition in the morning. It might come a bit later. If you're a transcontinental, no chance, right? So what you're starting to see now is these companies, these media companies, are starting to build up digital subscriptions on international subscribers. Just start with expats, right? So I think that there's a trajectory there for the media publishing side to grow, which is around greater digitization, which is around ring-fence subscriptions, which is about leveraging the diaspora Brits that want to keep in touch with things, and then monetizing that way, whether it's The Economist, whether it's any of these others. Now, where the digital side is really interesting is that MarTech is now full shape, and whereas in other sectors, AI has been a disruptor within MarTech and the media agencies. It's like a marriage made in heaven, because you suddenly have these people who are very switched on with technology, who are able to do much, much more than they ever were before, where they were always pressurized on costs and margins. So they were always limited in what they were being able to offer, but now they're being able to do a lot, and they're charging the same. So their value proposition is going up and they're winning more. And for companies to be able to get really sophisticated solutions from media agencies, what it's meaning is that media agencies now don't need to be as big. So you're seeing fragmentation, smaller agencies popping up, being able to compete and offer better services to end users, consultants, companies, saying we can do this with you because you got a really sophisticated suite. I think it's something like average chief marketing officer in corporation has a tech stack for marketing between 7-8 solutions as things stand. I think that's going to grow. But the way it's going to grow and change is they're just going to look to consolidate through media agencies where they manage the tech stack and do everything for them. So I think this is an interesting space to watch for. So if you're in the media space, look out for MarTech. Once again, last report, the slides. This is the one where I say, if we do, if you want to partner with us, talk more about what's going on media marketing, let us know. Fine. Okay. Last key takeaways. We're nearly finished, guys. So thank you for bearing with me. I'm going as fast as I can. For this, I think it was quite interesting. When we're looking at the key takeaways, I always like to look at the big boys. We started with the big boys. We talked about Global 500 and where's the whales going there in terms of corp. And now we're talking about the big boys in recruitment and saying, well, what's happening with the big boys here? Now, what's interesting for me is just looking at the share prices, right? So what I've done is I've done share price analysis just as a kind of a flat like comparison. Jan 22, Jan 23, Jan 24, Jan 25. How's it changed? Well, we all know what's happening 22. Oh my God, we were all making money hand over fist. It was the golden era of recruitment. It was the stuff people tell their grandkids. When I was a recruiter in 2022, you don't even want to know how much money I made. It was amazing. I could work for the beach and I was still billing 8 figures. Not quite 8 figures, but you know what I mean. Anyway, so what we see here is we see straight away the comparison between Jan 1 21 versus Jan 20. Well, look, everyone's down, right? Oh my God, some of them are down like, oh, a lot. Let's just say a lot so we don't be too controversial. Now, what's interesting is that obviously we all know this was a bubble. This was an anomaly. Yes, yes, yes. Share price start normalizing as the market starts balancing out. What then starts to be quite interesting is, once again, APSCo very big on their delegations. And I hate to point fingers here. Just got to do the comparison between Adecco and Robert Half, right? Adecco are obviously Swiss listed, very heavy in Europe. Robert Half, very heavy in US, and you can see 44% versus 18%. I mean, that just says it, right? It's just a very quick snapshot. By the same token, 9 of the top 10, which we profiled here, have seen their share price fall. Staffline, after massive restructuring, are now leveling. So my comment would be, in terms of what I know about what's going on in the industry, we would expect next year to see an inversion of this. We would expect that this to be the bottom. So we're looking at some positive news for people in the chat and people on the forum, insofar that we are expecting next year to be an uptick for the big boys, where instead of it being 9 out of 10 to see their share price down, we just expect it to be 9 out of 10 to see their share price go up. As the tide rises, we'd expect it to feel a little bit easier. That being said, we would say focus your efforts on the industries, if you have the opportunity to, on the industries which are going to see their government backing. So that's AI, that's defense, that's energy, that's real estate. And otherwise, as always, just be smart with what you're doing. Ask yourself all the time, if is this the best opportunity for our resource? Opportunity analysis is at the heart of a successful business. Okay. All right, I'm going to talk now. I'm going to leave this one long enough so that everyone can get their phones out and scan it. All right, so let's go. So we're nearly finished. How am I doing for time? Got 3 minutes left. All right, good.
3 minutes, and I've got another QR code for feedback on your
Yeah.
presentation, James, too.
So look, I'm leaving this up. We got. I'm gonna go hold for another minute because I know how annoying it is. When you're looking for your phone, you're looking for the QR code. It's so annoying. You're like, and then it screams off the page. You're like, But anyway, this was our magazine. This is a full length version. This basically in the magazine. These are just digests of all the standalone reports. We weren't going to fit like 16 1200 word reports into this. That would be far too long for anyone to read. So this is just like snapshot chat snot. So if you are in one of those industry verticals and you want to actually read more about what's going on in tech, what's going on in engineering, what's going on in real estate, what's going on in banking, you can go to our website, you can pull the reports. If you're interested in working with us and co-branding report series, you can do that too. Just write to me, we'll have a chat. If it works, great. We're always open. And but no, overall, you've been a fantastic audience, but I don't know if I had any questions.
No, I haven't seen any questions,
My God,
James.
that just means
That was so much info in a short space of time. I don't know how your throat's taken that.
I'm about to have a strep cell.
Fantastic insight.
All right. I'm going to go my last two slides and then I'm handing over. Well, 2 minutes to go. So look, vacancy analytics, all the data which we presented today, actually you can analyze it in our environment. And the best part is our team do it for you. You just have to ask them and they'll go, what would you like to see? And we'll do an interactive session with you online where you tell them everything you want to know, everything you want to see, and they build a report dynamically. So it's all turnkey. We do that for you. We work with pretty much every single major recruiter in the UK. We have clients spanning everyone from Hayes, Page, Walters, right down to one-man bands to help them grow, help them do opportunity analysis. If you haven't done a workshop with us, if you are growing, if you do have opportunity analysis questions, this is what you should do. I'm being serious. And the best part is, we're going to go this, we're doing a 15-day free trial. That's as much selling. And if you're in financial services and you want to understand more about what I was talking about with Pisces, all these other things, our next event is on March 11. I'm going to hand back to you now.
Thank you, James. Absolutely brilliant. Remember, everybody, this has been recorded. You will have a copy of the recording, so you will be able to see James's slides. Please zap the last QR code and give James a 5-star feedback because it was brilliant. And James, Annette's already said great insight, James. Thank you in the chat. But fabulous, great data. And remember what James said, if you want to partner with him on, I think it was engineering and
or
telecoms.
any of them, because they're dynamic, they change. So I'm always happy to have a chat. If I can't do it, I'll just say to people, but if you don't ask, you don't get. Even if I might have a partner right now, it might be that for whatever reason it changes.
You never know what's going to change. It's always good to know who's interested in partnering with you. Like I say, thanks so much, James. Great feedback, great insights, and hopefully the feedback will be just as good. Everybody quick, give it a zap before you all leave the room, and we'll see you soon, James. Thank you. Neve, just hold that up for a minute while people are still zapping, maybe.
All right, yeah.
But yeah, that was superb. Thank you. I don't know how you talk so fast for so long.